We have never been like this moment in history in terms of the amount of change that is it's already started. We feel the ground, as you just said, shifting underneath us. 5 major innovation platforms evolving at the same time. You have to go back to the early 1900s to see anything like it. You had 3 platforms then. You had telephone, electricity, and automobile. Today you have DNA sequencing, you heard it on the conference, DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technologies. All of them are in exponential growth trajectories, and they are converging with one another. Over the next 10 years, we believe the market cap associated with these 5 platforms and the 14 underlying technologies is going to scale at a 30% compound annual rate of return. These are astonishing rates of return. And if you're a good stock picker.
Hello, that was a segment from Cathie Woods and Ark Invest Big Ideas Summit 2022, which was streamed live on the 26th of January. So, in this video, we are going to look at what the hell is happening with PACB and its stock. Pacific Biosciences of California Inc. had a high of $51 1 year ago, and ever since it has fallen a crazy 72% to where we're trading right now at just above $10 a share. Holy smokes, what do I see for PACB? And what is the absurdity that I think I have spotted in PACB stock? 102.8%. How the pack is that even possible? Stay tuned for this and more. Keep it simple. Well. We have so much to update since my last video on PACB. First, they now have their new Hi-Fi viral SARS-CoV-2 kit available. This could be something to watch out for in the near future.
The Hi-Fi viral SARS-CoV-2 application is simple, cost-effective, and well-suited for rapid scaling. With this fully kitted end-to-end solution, researchers can be confident they will have the comprehensive, highly accurate information they need to capture emerging SARS-CoV-2 variants and protect the public's health.
We need to pay attention to this. On the 15th of February, PACB is going to have their 4th quarter and 2021 earnings call conference. There could be some big Easter eggs within this earnings call that could signal where we're going this year in 2022. Let's get the news out of the way. On the 11th of January, PACB announces record preliminary 4th quarter 2021 revenues and new sequencing kits and workflows and expanded collaborations. This is very bullish. And why did they release this? I reckon that they are so confident on their numbers that they wanted to get this out there so that people have time to react. What are the highlights? The preliminary 4th quarter revenues of approximately 36 million represented an increase of approximately 33% year over year. That is big, and as a result, the preliminary annual 2021 revenue is expected to be 130.5 million, which is a growth of approximately 65% year over year. That is significant, which means that the market is expanding. And much like Cathie Wood says, a CAGR of 30% seems to be the minimum we can expect from PACB moving forwards. On the 11th of January, PACB also announces that they and Google collaborate to use machine learning to optimize the long read sequencing data analysis. That is big. Under the terms of the collaboration, PACB will explore the use of Google's genomic analysis, machine learning, and algorithmic development tools to further improve PacBio's already highly accurate variant calls for Hi-Fi sequencing runs. This will unlock more insights from the PacBio sequencing data. Any collaboration with a giant such as Google is only spelling proof of concept moving forwards. Also, on the 11th of January, PacBio announces a collaboration with Genomics England to sequence biobanked rare disease samples using Hi-Fi sequencing technology. This is big. Genomics England was initially created to deliver the 100,000 Genomes project, and the fact that they have selected PacBio should tell you that PacBio are top dog. Finally, also on January the 11th, PacBio and Berry Genomics announced collaboration to bring long-read desktop sequencing instruments to clinical market in China. This is the next step. The new collaboration builds on existing relationships between the two companies to develop desktop systems for the clinical market in China. And that means Berry Genomics will purchase at least 50 instruments at project launch. That is big. So, Ark Invest have been one of PacBio's biggest supporters for a long time, where PacBio last year also hit the #1 spot in the Ark G ETF. However, today it is down at the 8th spot with a weighting of 3.56%. But are Ark selling, or is the portfolio expanding? Ark are not really selling or buying PacBio at the moment, and it seems that they are holding strong and holding long to the tune of their own research. And why is that? Well, Ark already own around 11% of PacBio, so to increase their ownership in one company even further is rather limited in my opinion, and exposure in one company should be limited for an ETF. One of the biggest factors of my bull case scenario for PacBio initially came from the massive institutional holding of the stock, and yet today, when we look at Fintel, there must be some mistake. Institutional holdings are at 115.55%. How is that even possible?
Just ask the people in El Salvador.
Clearly, this is a mistake on Fintel. But when I look through all of the stock websites, I think I can summarize that Yahoo Finance has it pretty accurate, and herein lies the issue. Let me summarize the state of the stock of PacBio, and you can fact check me on all of the numbers, which I've looked through all of the websites, but here they are. So, the total shares outstanding is 220 million approx. The institutional ownership varies on all kinds of websites, but I think Yahoo is rather conservative already. So let's take Yahoo's numbers on face value at 87%, which is rather similar to MarketBeat and FinViz. Obviously, Fintel is the anomaly. The insider ownership of the stock, according to Yahoo, is 6%, which varies drastically when you compare it to MarketBeat and FinViz. The short interest also is very similar across the board, and at Yahoo is noted at 9.8%. Can you already do the math? So, the Yahoo metrics, 87% plus 6% plus 9.8% gives us a whopping 102.8%. How the pack is that even possible? Where are the retail holders?
Just ask the people in El Salvador.
What are the retail holders holding if all of the shares have already been taken? Something big may likely come. Incoming catalysts include the Q4 full year results. To get 102%, it literally means that one of the numbers is incorrect. And the only one, to me, that could be incorrect is the short interest. So what do we have here? Some naked shorts, perhaps? I don't know. But this, to me, signals that we could possibly be on the verge of a horrendous violent squeeze up. To summarize, something is clearly not right with PacBio stock, and I can smell jeans from a mile away. Thanks for watching, and please note that at sub $11, PacBio is ridiculously undervalued. And if you take Ark Invest research and where they think genomics and sequencing are likely to go in the next 10 years, you will know that this is a piece of coal that is likely to be turned into a diamond. So please take my drill with precaution and always do your own DD. If you found this video informative, then do me a simple favor and go on, consider subscribing to this channel so you get a pop-up when a new video is uploaded. I am a simple trader. I try to keep this simple and will simply see you in the next one.